Welcome to the New York Outlook for Thursday, the 11th of January 2024. Starting off with the economic calendar, we have significant red folder news being CPI. Having said that this is significant red folder news, any trades that you are in, I'd encourage you to close it. And yeah, wait for the news to be released and then fade it accordingly, provided that it does fit in with your technical analysis narrative. In terms of the 4 hour, our we do have confirmed bullish market structure, as you can see right here. Nothing much has changed from this morning other than the fact that we did wick the 4HOB pullback phase. We're still primarily on a short bias. However, what you can see right here is we reset the secondary leg that was developed Friday or Monday, and we essentially validated new secondary legs that we could trade from on the 15 minute. On the 15 minute from this morning, I was able to actually validate this chalk level because you can see we body broke this high, which was really good actually, and then we wicked this chalk level, validating the secondary leg. However, one thing I did forget to point out in the London Outlook is the fact that the previous day that our at the time of where this is, and shorting from this level is a bit risky or is not in my trading plan because it is above the previous high of the day. Because it's above the previous high of the day and the distance between the two, my trade plan only allows me to short below the previous high or low of the day unless I have significant red folder news or any red folder news for that matter to support that price should move to the downside. In this case, we had no red folder news events in the London and Frankfurt sessions, and thus we couldn't validate any shorts. There was a potential short, which I'll talk about now quickly. So once this 15 minute, 5 minute chalk level was validated, we could essentially on the what these gold POIs that you're seeing are on the 5 minute. The reason why I marked it is if you look in this leg, there's no liquidity in the leg, right? Technically, because we have validated the idea on the 15 minute, there's no reason to move to the 5 minute. However, because of the POI, this POI on the 15 minute is essentially this entire candle right here, and if we use just this candle, you probably wouldn't have got tagged in due to spreads. So on the 5 minute, what we can see here is available liquidity in the leg just before this POI, so you could potentially have structured your entry like this, covering the high of the day, maybe a 9 pip stop loss, and price actually moved quite nicely to the downside. However, it's unlikely that you would have taken profits at this point because we're not anywhere close to the London lull and we're not close to the New York session, so you probably have left it open and taken a PE on that trade, which is why my rule in my trading plan to avoid shorting from these areas, because most of the time they don't actually follow through and it's actually more worthwhile waiting. In terms of the New York forecast and what I expect, there are two scenarios that could play out. Scenario one being that shorts continue to play out and the secondary leg remains valid. So upon the CPI news release, I'll wait for the news release. If it validates shorting, then I'd obviously need one side of the London range to be liquidated, after which I can look for a POI to trade from. Yeah, so again, I think the key here is actually waiting for the news release. If CPI is negative for the USD, supporting if it's positive for the USD, indicating a stronger USD, then we anticipate that GU will sell off, and if that's the case, then obviously we can short, but like I said, we need to consider previous range liquidity prior to taking any entries. And then in terms of longs, the other scenario that I did want to discuss for shorts is the fact that we can make a New York high of the day just because of the CPI spike up, but then we'd obviously be able to create a new New York low of the day, high of the day, And if that is the case, then we have sufficient red folder news to actually allow us to short from a New York low of the day and trade a short above the previous high of the day. So that's the scenario in terms of shorting. Then in terms of longing, we'd need to wait um, for a 4H candle body break of this level. Once we do get that 4H body break of that level, then we can validate a 4H primary leg and consider longs. When considering longs, obviously we will anchor our fib something like this, and then we can look for a trade or POI that aligns with our 50 or 38% fibs. We can factor in liquidity in the leg, however, we don't necessarily need to do that. The other thing is we can trade from a 50% level because of the idea of New York continuations. However, the one thing I do want to highlight is the fact that we will need to take into consideration how far we've moved in terms of the daily range. If we move 75% or more, then I'd question whether it's actually worth taking the continuation. It's also a Thursday, so there's a chance that maybe let's not talk about Thursday. We'll mention it tomorrow in our Friday outlooks when we talk about the weekly bias. Other than that, I think that's our scenarios for the New York session. Trade safely, but we'll chat again for the end of day review. Have a good trading session.